trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a quick look here at coffee. I don't trade it, but Simone does, and so we've been following this, and I just wanted to show you. There's where we were yesterday. You can see there was the 30th, and here we are into the 1st. We mentioned, remember yesterday, that if we start breaking below here, that's going to give us our target right there, and that's exactly what happened. But what's interesting about this target is the fact that it's not moving very much, folks. This thing is now down 30 cents from the high. 30 cents times 4 is $12,000, folks. In how many days? 1, 2, 3 days. That's a heck of a big move. Remember looking at this on the daily, there was that big ABCD right there. That's all that was, and there's where we are right now. And that's that number we were looking at right there at 367. So we're going to see what happens if we get a rally from that level. So we're going to take that off the board and get back and take a look at some of these other things. Now, the cattle have a small profit in it. You can see here we jumped up a little bit. Now we've sold off. It's got a full point in it, so if you wanted to take a $450 profit, you could certainly do that. So far, all we've done today after the big break is to rally up to the 382, which is right up around here, around this level right here. It hasn't really done very much. It is still up on the day, but nothing really to bang the drum or anything like that. So that's what we're watching here today. Okay, now let's move over here and get out of the way, and we're going to take just a quick look here at the soybean meal, because we had a nice profit in that, and we said that put your stop at break even, which was 302, and by golly, it went right down to 302 again, made a lower low of 301. But because of the fact we've been here 1, 2, 3 days, I suggested that if we get back there again, we should put our stop at break even, because it had no movement coming off of either one of that. This it did a little bit here, but nothing there. That's why I said let's keep our stop at break even. That way you're in a risk-free environment and you don't have to worry about it at all anymore. Okay? Well, you can worry about it if you like, but it doesn't really do much good. Now, this is the December meal that you're looking at. Now, remember, we have one other thing going on here that we want to have happen. Excuse me 1 second, folks. One other thing that we want to have happen here. Well, I'll get to the gold in just a minute. I've had people banging the drum about the gold. We'll be right there. Okay, now this is the one that's really important from my point of view. This is the December wheat. Now you can see we've been down here. We had 3 lower bottoms. We had a little bit of a rallying a couple cents today, nothing. But the day that this should come in here is May the 5th. So you can see that's right there. And what's that doing is I'm measuring from the high to the low. This is squaring price and time. Let me get this up here so you'll be able to see it. There's your high right there. You go over to your low right there. Okay. Now all you want to do is, if it went down for 13 days, it should come down from 13 days off the high. And where does that take us? It takes us into the 13th. That's next, it's a week from Monday. That's actually a week from Tuesday, so it's got a long way to go to get to that. So that's what I'm waiting for. There's the 1.27 at 5557. That's 13 cents from where it is right now. That's a heartbeat in wheat, folks. That's nothing. So that's what we're waiting for is 5557, 5576, $5.57 let's call it $5.58 per bushel. Okay. Now remember, this thing a couple years ago sold for $13 a bushel. Now it's a fraction of that. It's like 35% of that, and they can't give it away. Well, people are not going to stop eating cookies and stuff like that. So keep an eye on that. That's what you want to be paying, very, very close attention to as you're watching these things here today, okay? So that's just what we're watching. It's not a big deal. So let's pay attention here to what's going on. Okay, now there's where we are. We'll get this out of the way, get our meat out of the way here. We know what we're doing on some of these other things. So what we're going to do now is we're going to take a quick look here at the crude oil market, because crude oil just did something exciting, if you like excitement, and we do. There was a big move today, and we had a pullback that went a little bit below the 382. Went 30 pips below. You can see it stayed there for a heartbeat, and then it's had a pretty good rally. Now, the move that it had from the high, yes, and this still looks very slow. Can you believe crude oil is $58 a barrel, and we're still paying $3.20 for gas? Shut the front door. That doesn't make any sense. Anyway, that's where we are right here. We need to get Mike Moore on here tomorrow and talk about some of these energy things, because he's really good at that, and I haven't covered them. I've been so involved with some of the other stuff. So that's what we're looking at right now in the crude. There's really nothing to do here. Let's just look at it from an AI point of view, and you'll see here, this was a really nice top right here, folks. Early this morning, you can see there's a beautiful butterfly right up there at the high, which was right at that 786 level. I'll just draw that in so you can see it, and it's due to start down at that point, and it did, and then it stopped, and now it's just meandering back and forth. So there's not much is happening in the crude oil market as we watch this returning. We're getting a nice little rally here in stocks. Let's get over here and take a quick look here. So here's the stop and P. Okay, now this is what we've been watching all morning. This has been the high that we made up here was 56.84. We dropped 50 handles. Then we came down and we rallied up a little above the 382 so far, but we're still rallying. And the AI says this has got a chance, like it has every other day, to go up even higher. Let's look at this on a larger time frame and see where the 382. Well, you can see there's still that pattern right there outstanding, which is at 57. I think it's 57.02. We got to 56.85, 83. Then we just pulled back, and there's nothing. I mean, it's just still way up in the air. There's nothing bearish about it at all yet. There really isn't. You know, it hasn't. Well, that's just yesterday's move. You see, yesterday's move was right at the 61% retracement. Then you had a 382. Let's see if the 382 was related to any of these others. So the only way you can do that is to go to the 8-minute. That'll show you the higher high. Okay, that's it. So you know that this was a 382 right here yesterday. This was on the air, folks. While we were on the air, I said, look out, Gertrude. I said, this little puppy don't want to go down. And boy, it didn't. There was your A, B, C, D coming in right there at 10. And the low was 12. So it missed it by 2 points. Then it pulls back one more time. So this is a really critical one. Let's just see where the retracement came to from the high that we made up here. See, it didn't even make a 382 retracement even on that yet, so there's not really anything going on. There's something going on, but it's very short term, but, you know, we like short term. Let's just look at it here. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we're going to take a look at the gold market. We had that 135 pattern yesterday. That's on the hourly chart. Remember, looking at this on the longer term, it says we're going down to this level. Now we've broken down below this level. Let's go back to that hourly because it's important, and we'll take a quick look at it and see what's going on here. Well, let's just figure out what's happening here. Oh, I know what that was. I heard the old beeper go off. All right, there's where we are. Okay, here's where we are. Now you can see here we came down and made 2 1.618 expansions with no bounce. With no bounce, folks. That tells us that we are heading down towards that level, which is 3175, which is the big ABCD. This is going to 3145 is the big ABCD. 618 is right there. Mathematics precedes geometry. So that's probably where we're going to be headed here. Now, if we get starting it below this, then this, well, below here, you know that this is going to be the high for many, many months, probably years, because you can see there's drive 1, drive 2, drive 3. That took 10 days to run that last $300, but boy, it did it. And it did it with dropping open interest too, which is a big deal. So anyway, that's what we're watching here this morning in the gold market. I haven't had a chance to look at silver, but someone asked me to take a look at it, so I will right now. We'll just get this up here. Shouldn't be too hard to find it here. Starts with an S. There it is right there. Get the daily up and see where we are with the silver. Silver's still backed off a little bit. Let's just, well, it's been a couple days since I've checked it, so let's refresh this. All righty. Okay, now there's where we were yesterday. 3 days ago, we made this. Let's just clean it up here so everybody can see it. Don't want to be up. There was where we are. There was your high that we made right back here. Went right up to the 786 to the exact tick, and it's backed off a $1.50 or $1.50 per ounce. And we'll move over here, and you'll see that the low that we made here today was not even close to a 382, so it still has some bullish bias in here because it is still going up and it's held. And even the gold, even though it's sold off, it still has a bullish bias. If we get below 3,100, then the bullish bias is going to be really suspect. But until that happens, probably not much is going to happen. So we've covered the gold. Okay, now let's move over here. Here's the Dow Jones. You can see here we've had a pretty big run up. We went from 412, we dropped 300 points. Now we rallied back 200, or 100, 150. So that's a 50%. 300 down, 150 up is a 50% retracement. So that's what we're looking at here this morning. And there's a lot of news out. I don't know what it is, but it's got to be related to tariffs or something like that, because the volatility that we see at this level is tremendous. Going to the daily chart here on the Dow Jones, you can see here, this is the long-term daily. Okay, now, our high was made here. Actually, the high was made in February. There was a higher high right back here, I believe. No, there was a double top. That's correct. There's your double top right here. Today's high, we're 100 points higher than the 50% retracement. From that high to right there, back 50% retracement. The S&P 500 is setting exactly. We showed you that when the show started, at the S&P cash with that big gap up is setting exactly at the 382 retracement. Now, someone asked me a question. I can't answer because I don't know the answer. I don't think it's correct, but the question that they had was, when I've been talking about this silly chart that I looked at going back to 1929, could we be here and really that's where we are instead of all this other stuff? Folks, that I don't know. It just didn't fit right. This was where it fit perfectly, because this was the 3rd of April. Then we had the big move down, okay? And it's down to right about there. And then, of course, they changed the rules on the tariffs and the market turned. It was supposed to be coming down into the 28th, which was 2 days ago, but it didn't do that. So that's why I don't think that's related to that. Remember, these cycles, this is 1929, this is 2025. That's a 92-year cycle, folks. So that's why we've got to, really respect it. And Stan Harley does a pretty good job picking out the dates. He'll be on our show next week. Grace Morris will be on Monday. On Tuesday, we'll have Paula Webb. So we'll have a good group of people next week, and we'll try to get Bill Meridian back on again, too. So there's where we are looking at this right now. We've been up for 8 days. That's also an unusual move. But here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. This one is 1, 2, 3, 4, 5, 6, 7, 8, 9. Today's the 9th day. This was 9 days up. 10 days up, and this was 9 days up. So that's an outlier event. That means it doesn't happen very often, but it does happen. See, this one was 12 days up. This one was 9 days up. So they do occur. So that's why you got to be able to use a stop on some of these things that you're watching during the day. So let's move this out of the way and get some other things covered that we need to cover. And there's where we are. We just had a little 50% rally here in the cattle. You can see it's rallied back up, trading below the opening price still, but this is a big move, folks. I still think we're going to be going down to that 204, 205 level, but we sold it up here, so it's doing okay. So the best thing you can see, when it opened today, it was just a little bit underwater. So if you wanted to really be careful, and it's always nice to be careful, just put your stop here where we sold it, up here at 210. And that way, you look at it again in a day or two, because we could make another jab up. So it's not how much money you make, it's how much money you don't lose, all right? Now, in the news today, and it's quite heavily in the news, that is the Japanese yen. And we talked about that little rascal yesterday because it was getting ready to have a rally, and boy, did it ever. Here's where we were. Well, not yesterday. It was a couple days ago. Anyway, we had the 50% retracement in here. Okay, now there's where we were just a day or two ago. Now, let's blow that up because that was important. You see, we're going to blow it up so you can see it really clearly, because this is where the action happened. There's your 135 pattern right here. You see the higher bottoms coming in? This was the key time right in here. And where was that? Early this morning. Look what happened. It rallies 200 handles for 2 handles. That's $2,000 in the Japanese yen based on this. You're just breaking out of this level. So when you see that, you've got to pay attention. Now, one of the things that we were watching, at least I was trying to watch it, is from the low here to the high. You'll see the pullback came just a little bit below the 50%, and then it took off. And then there must have been a news item exactly. No. This was early in the morning, so this was happening in Japan, and I have to turn this off. Oh, it's going to be a scam call. Oh, dear, that's my little sweetheart. That's my daughter. Time out. Laren, Dad's on a radio show, sweetie. I'll call you later, okay? Love you, honey. Bye-bye. Okay, there's where we are. There. Okay. She doesn't need money anymore, so that's good. I should get money from her. Anyway, there's you can see we had a nice move. Now, where are we going to go from here? We need to go to a little wider, bigger thing here because it's just having a nice ABCD run here. See, the original one was 144, but we had a lower low in here, so we have to redo that. We're just going to do that right now and see. Well, we're almost there right now. Let's just take a look. 877-927-6648. Oh, we're close.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I had a question about the political stuff that goes on. Folks, I don't watch the news. I swear to you, I do not watch the news. I watch old Western movies, which I really love. And a lot of those guys I used to know, especially the character actors. But I watch documentary stuff, but the news, to me, it's all baloney. And it doesn't make any difference what country you're in. It's the same stuff. They just change the names of the people. So I've never been involved in politics. I don't want to be, but you have to follow it, I guess, because you see these things come out. One day it's going to be tariffs. The next day it's not going to be tariffs. Let's get back to the charts. Remember this 382 we had here for the last 10 days? We broke that this morning on May 1st. Okay, now as soon as we broke that, first thing you want to be watching for was watch for a 382 rally, and there you got it right there. This was early this morning. This was around midnight. Here it is about 7-8 hours later. It makes a beautiful 382. It's now down well over $600 from where you had a chance to sell it, and that gives a possibility that maybe, if it's right, you're going to get another ABCD that would take you down here to this 1.618 level, down around another 80 pips. That would be a nice winning trade. But no matter what, you would be at break even now because you don't want to give anything back if you were doing it. These were the kind of things we try to cover on our newsletter. The videos that I send out each morning, but all the time we don't always get to do that. But let's take a look here at the let's just give me 1 second here, boys and girls. Only take me a minute to do this. This is the Treasury bonds because this was one that was set up for a really nice sell this morning. I mentioned it here. There was the one where we were yesterday. Remember, we had that one that the 135 pattern, 135, and it made $500, and then of course it went up and came down again. But all it was doing today was making this A, B, C, D. Let's see how close it came to the exact number. I see it's off by just a little bit, but it's pretty close. Yeah, see, it's going to come in at around 117.10, and the high was 117.07, so it missed it about 3 points. But if you'd have been watching real closely, there's your first 382 retracement here, folks. There's the move down. All you got to do is go down to an 8-minute chart, and you'll see it really clearly. There it is right there. We'll just move that over and go from your high down to your low. There's your 382. Well, it actually hits the 50. Well, it's 2 ticks between the two. So that's pretty much it. And now it's coming down. Let's see where we are in respect to thing right now. The bonds, they really should start to go up a little bit, folks. So remember, I've been super bearish bonds, and then because of the fact that they had this long-term weekly big break, and we've had this little bit of a rally, but we've been going up 4 weeks now, and it hasn't really gone very much. The high it's been here is 50%, it looks like. Let's draw it in right there. Yeah, no, that's not right. It didn't catch, but you'd think it'd be a lot stronger, but who knows? Yeah, there's the 50% is 27, and today we got to 07, so it went a little above the 50% level, but it did it in an ABCD format, but it missed the CD, so there's not much you can do with that. Let's just, since we're doing this together, let's just check the Treasury notes, okay? Because that's the larger. It's 6 times the open interest, but they don't have the same volatility that the others do. I got to get it up in here somewhere. There it is right there up at the top. Let's get that hourly chart up here and see what it looks like. Because it doesn't, it's got a little bit of bearishness in it right now. Okay, there's the notes over the last few days. We'll just bring it up like this. Okay, you can see it still had a lot of bullishness in here. In fact, the pullback so far this morning, let's just draw that. That's not going to do it, so let's get rid of that. And we'll just draw it from the cheap seats here in Tucson and see where we are. The biggest low right back here is right there, so no 382. Oh, bingo, bango, bongo. There's what we hit today. There's your 382. It held it right there. So that's it. Oh, these are very similar. This is very good, Larry. You ought to look at this more often. The last pullback we had was this amount. This one here is a little bit more, but it stopped right at the 382. So this is important. Hasn't rallied much, but going below that would be like in the euro. It'd be really quite nasty. So I've got to mark that just to see, because interest rates, this tells you interest rates have been dropping over the last 10 days. They haven't dropped much, 7 days, but that's what we have going on with this right now. Okay, so we'll get this out of the way. Sorry, folks, I've got the Palo Verdes and the frogs. I have a frog in my throat right now. We'll see where we are. Okay, let's get back here and keep talking about the yen, did the dollar index, did the bonds, the crude oil, done the gold, done the wheat. Oh, we got to go to a couple of stocks. Hold on just a second here. I've already done the day for the next week will be the day we want to be watching December wheat, folks. I think it's got a really good chance to get down another 12 cents. That's 12 cents wheat. That's a blink of an eye, so it could happen at any time, but we're watching that one really, really closely. All right, we're going to first look at Apple today. Apple has their earnings out today. This has had a pretty good rally here over the past few weeks. As you can see here, we've gone from all the way down to 168. We rallied $60, folks. Let's look at this on the long-term daily. $60. Well, $60 has brought us up to the 50% retracement of the high from right back here, and 78% of the retracement from right there. So, and we've been here for 3 days, and here's the news coming out today. There was the old high at 250. I thought I was going to get to 250. It went to 260. But we are sitting right there. Of course, with Apple, the earnings, they always go. But this is held up. It usually go higher after the earnings, but lately that hasn't been the case. So anyway, we're having a nice rally here where it's major resistance right here. If you had to put a gun to my head, I would own a put. But the trouble is, folks, these boys in the puts and call field have raised the volatility premiums on those that it's just flat out absolutely unbelievable. As a matter of fact, just take a looking today what options would have cost you. Looking at the standard deviation today in the NASDAQ, okay, there was the high of the day right up there. That was your standard deviation. Then we had the big sell-off here just recently. We're just messing around. The premiums here are so high that you really don't have any chance unless your timing is absolutely perfect, and that doesn't happen very much. Okay, now let's move on here. I think we got a break coming up, and let's see. Yes, full 40 seconds. We got a chance to take a look at Amazon. Been asked to take a look. This has gotten beaten up pretty bad, but it's coming back better. And I'll see where we are right here. We're getting close to that level, I think. Yeah, we're almost there. We're almost at the 382 in Amazon, folks. Let's draw that in. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're going to take a look at Tesla. As you can see here, we've been banging up against this 382 of the high we made back here for several weeks. It's a big consolidation in here. Right now, the market's up just a little bit. Completed the ABCD. There was the 135 pattern. When we popped above that, that was a quick $40 move. Now, we're going to take behind it is Nvidia. And you can see Nvidia is up today, quite a bit below the 150 high that we made, but there's a possibility here. Now let's just look at this on a daily basis because we can see it a lot better. There's where we are. We're banging right up against the 382 of the whole thing, folks. That came in at 111, and we're up today at 113. But easily you could see with something good news of any kind, you could easily get this up here to the 123, 127 level. Now, it's in a downtrend, as you can see here, and we've gone to this 382 level several times. Only $2 above it, but it looks like you could easily get to that level, okay? That's enough of the stocks. Let's get back to something that we like to see, and that is soybean oil. Let's get up here. We want to watch this one, folks, because I want to, well, let's do the July first, and we're going to be taking a look because it should be bouncing back after that big drop. There's where we were the last few days. You see we had a nice run up, okay, and here's where we are. For today, you'll see the low to the high. 382 came in right there this morning. That's a little over $700 move off of that. And it's an A, B, C, D, spot on. There it is right there. Now, if you do that, follow soybean oil a few times, that'll pay your bills for a month. If you live in a grass shack in Tahiti. Anyway, that's what you're watching right here. It hit the exact 382, hit it twice yesterday and again today, taking out the lows of yesterday by a tick, going nowhere, and now we're having a pretty big run. Probably this morning there was even maybe a chance for a 382 somewhere. Yep, there was. Well, it was a little more than 382, but there was the pullback right here. We had the big run up, pulls right back to 61% retracement, and then whew, off to the races. So that's been a pretty big move here, a 1.5, and that's $900 in soybean oil. So that's a pretty good run. Okay, we'll get that out of the way. We'll get the Apple out of the way, and I think we got most of these others done right here. 1 second. I'm watching about 9 different things, folks. So that's the main thing. For me, from my perspective as a technician, okay, and I don't look at the news, folks. I really don't. But this means a great deal to me because it's important from a standpoint of Fibonacci and technical analysis and everything else. And that is this right here, which is this daily, let's get this up here, the daily 61% retracement was right there, and we've been below it almost all day. You can see that. Now, if this is correct, this is a 61% retracement. This could be an A, B, C, D to the downside. There's a gap here, folks. There's a gap here. You know, there's a gap there. I mean, you don't see many gaps. You see one here, but usually there's no gaps in here. And look at the gaps on the way up here. That was understandable because everybody was super bullish with the New Year and all that stuff and the election stuff. Anyway, now there's where the fact that we went right to that level right there. Okay, that was exactly 61% of that move right here, and from the high to there, you'll see there's your 61% right at there, same level right here. Now we got to get the high off of here because we need to see the high off of the secondary high, which is the one I'm trying to draw right there, and that comes in a little above the 786, well, quite a bit above the 786. But this is the key one here, is the 786,618 of this whole move right here, and the fact that it's up 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So it's an outlier event, but usually after the outlier events, market rolls over. So we'll see if that's going to be the case. All righty. The main one is that Russell doing what it's doing, and the fact that we've had this hit this level right here. The NASDAQ, totally different story. I think I have it here because I wanted to talk about it, and I might have missed it. Let's do it again here. Bring this NASDAQ up so folks can watch it. And it's getting so good. There's our NASDAQ. Up a little higher there. Go up in there. Should be right in here somewhere. Here it is, right there. There's a NASDAQ, and we're going to get this up here on the daily. Make sure I got it. There it is right there. And, well, we haven't made the 618 yet in the NASDAQ. You can see they're come close. Let's blow it up here, get rid of some of this stuff, and redo the whole 9 yards, because there's your high right back here. And there's your, oh, why, by golly, it hit it today. I didn't realize that. Son of a gun. Let me see. So you had the Russell hit the 382. You had the S&P hit the 618. You had the NASDAQ hit the 618. Wonder if that all means anything. Well, I got to do some refreshing here because there's a little bit of stuff missing, but you'll see it fill in. Yeah. See, so that it did make it. Wow, 2073. Very unusual. And it's 100 points below it. I don't know if it means anything or not. But I know one thing: if I had a chance to sell that that Russell at 1999, I think you have to take a chance at it, because by golly, folks, you didn't have to risk very much. 10 points, $500 would have been it, but who knows? All right, getting back to someone's asked a question about the gold. Would I be a buyer of gold down there? Folks, I try to trade gold all the time, and today let me just show you what I was doing today in the gold market. I was trading with my good friend Jimmy Elder, and you can see here we had this big move down yesterday, okay? There's the big move down yesterday. So what I was trying to do was to find a 382 rally in here that I could possibly get short, and there wasn't nary a one. And I went to try to get it there. I didn't get it. I missed it there, so I didn't get anything done at all, because I want to be a seller, because I believe it's heading down to this level of 31, let's do it again. 31.75 is a Fibonacci number. 31.45 is the ABCD. Now we've got some other ABCDs lining up in here now too, because of the fact that it's coming down so hard. There was the part of that 135 pattern that we looked at, so that's completed down here. So that's at 1.618. But you can see here, this thing is not bouncing very much. This is what they call the old proverbial dead cat bounce. This thing is heading down to this 31.76. Folks, it's only $50 away. It's down $80 today, I believe, is what it says on the tally. So, between yesterday and today, it's got to be down, let's see, 340. Yeah, it's got to be down over $80. So there's no bounce in the ounce on this one. So I think that we've made a major high in the gold market. That's my 2 cents worth. Let's take a little break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, a request is coming in for sugar. I haven't looked at the sugar chart since, a long time. Okay, here is sugar right here. Let's just get up and draw this. There's where we are. You can see here we're making some type of a bottom right now. Sugar was 23 cents a pound. Now it's 17 cents, so it's come down quite a bit. Now, I'm not making recommendations. I'm just going to draw in some patterns, okay? First of all, you can see here we have a large ABCD pattern coming in right. Oh, shuck. The front door and razor in. Hector, hold on just a minute. Let's just draw it in this way. There's your A leg right back here, all right? There's A, B, C, and D says we're heading down to that level right about here. Whoa, this is really low. Wow, 14-cent sugar. That's pretty cheap. But let's look and see where we are with the smaller patterns that we have going in here. We'll leave that in here, but we want to watch this one right here. I don't trade sugar. I haven't traded sugar once in the last 10 years. There was a beautiful ABCD, and then look, 1, 2, 3, 4, 5, 6, 7 days, folks, and it doesn't do anything. All it does is make a 382 off of that previous high right here. There. Well, it doesn't even do that. That's how weak it is. We're heading down. That's all I can tell you. You know, this doesn't have any friends, and getting less and less each day. We're making new lows of the year. Yes, the last 3 or 4 days. So this is not a good sign for sugar, which is not many people. Well, a lot of people eat sugar, but what do I know? I better be quiet. I know less about sugar than I do about politics. And I don't know anything about politics. All right, folks. Listen, tomorrow, live every day in an attitude of gratitude, and may God bless. We're going to have Mike Moore of Moore Analytics as our guest, hopefully. And it's the last day of the week, and it should be a lot of fun. Am I correct on that? Yes, it is. Friday the 2nd. Shut the front door. We'll be right back. Tomorrow, we'll be right back.